Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, we'll do some TA, look at various time frames, and we'll also take a look at some moving averages in relation to previous market cycles. So we're going to start here on the monthly time frame. There are still 2 more weeks before we close this monthly candle, and I am keeping an eye on this monthly order block from this red candle in an uptrend. These are areas of supply and demand, and they become of interest later on when we interact with those levels. They can act as support or resistance. For me to turn bullish here, we would need to get back above this order block and also this trend line connecting the overall lows. And down to the 2-week time frame, we did just open this new 2-week candle at the start of this week. We can see the previous 2-week candle only just closed green here, after being pushed down from 45,000 down to 38,000. This is the monthly order block in red here, and we also have these 2-week order blocks in blue. And these order blocks have been less relevant as we have been pretty much just trading in between them. And when looking at order blocks, we're looking at the candle bodies. So we're looking at open and closes and reclaiming these order blocks or losing them. We do also see doing a fib retracement from the 29k low to the 69k high. We do have that golden pocket area between 43 and 44,000 approximately, and this will be a key area to reclaim for me to also flip bullish. Looking at the 786 level, we can see we have been holding that level with all of these candle body closes. But typically in a bull market, we do get support of the golden pocket area and carry on higher. We are also in this macro parallel channel with these blue lines with 2 touches on both sides. And this may become relevant if we were to come back down here and retest this trend line, which is currently around 34,000. And down to the weekly time frame now. These yellow boxes are the 2-week order blocks, and we also have these weekly order blocks in blue. And just zooming in on that area, we can see this order block from this green candle in a downtrend has been our key resistance area. And again, looking at the candle body closes, we can see for several weeks here we have weeks higher, but we have been pushed down and end up closing between 37.7 and 38.5. And looking at the stochastic RSI, we have gotten above this 20 level, which is a good sign, and there is plenty of room to move higher here. The RSI still has this possible hidden bullish divergence between these 2 points. You see lower lows on the RSI while making higher lows on the price action. And for that to no longer be in play, we would need to close a weekly candle below 31,700. We also have this blue block drawn in here on the RSI between a 50 and 55 reading approximately, and this is a key area to get above to flip more bullish. We can see on this run here on the pullback, but above this blue rectangle, came back down and retested it and acted as support, and then we did push higher. We also see that early on in the beginning of the bull market here, where it did act as support and we did push higher. Conversely, in the bear market, looking at 2018, once we broke below this area on the RSI, each time we came back up, it acted as resistance as we did keep going down and complete the bear market. And then once we did get back above it again here, well, temporarily, it did result in quite a decent bounce. And again, during the 2016-2017 bull run, we used that area as support on all the pullbacks. Pulling up the weekly EMA ribbon now, has been acting as resistance. Once we did close below this ribbon, all of these pushes higher have been sold back down. We've been unable to get back above the weekly EMA ribbon. We do see it starting to flip with the yellow moving average, starting to move towards the red higher moving average here. See, it's about in the middle of the EMA ribbon, and on previous occasions, whenever this has flipped, it has indicated the continuation of the bear market. Also in 2014 bear market, we saw it flipped here, and it indicated the continuation of the bear market. So this cycle has been very different to the previous ones. I'm not ruling out that we could do something different, but I would need to see us get above this weekly EMA ribbon and open and close a candle above it, including the wicks, without touching the EMA ribbon, to give me some confidence that we're going to push higher. If we were to do that, then I would also need to see this yellow moving average get back above the other moving averages here, and then on pullbacks it would give me more confidence that it's going to act as support like we did on this occasion here. And that weekly EMA ribbon is pretty much in the same price level as the golden pocket area we spoke about. So let's look at a couple of moving averages now. This yellow line is the 50-week moving average, and the purple line is the 21-week moving average. We do see they are getting close to a cross here. I just want to compare previous bull markets with these moving averages. And if we look back at 2018 here, obviously during the bull run, we used the 21-week moving average as support on the way up. And during the bear market, we can see we use the 50-day moving average for support here. Once we did break below it, it did turn into resistance on the attempt higher, and then we started using the 21-week moving average as resistance on the way down also. Again, reclaiming both of these did result in a bigger move to the upside. And looking at the 2013 bull run here, I'll just flip it to the log scale so we can look at this price action a bit better. You can see we had our initial run up here, use the 21-week moving average as support, and we had this big mid-cycle pullback, which initially I thought we may be doing, and we may continue the bull run. But we can see, even though we dropped below the 21-week moving average here, we never dropped below the 50-week moving average and stayed well above it as we continued the bull run. If we go into the 2014 bear market now, we can see we dropped below the 21-week moving average, used the 50-week moving average as support on the first touch, like we did in the 2018 bear market. And then once we lost that 50-week moving average, we continued our way down. We didn't retest that moving average. Instead, we got resistance at the 21-week moving average all the way down. And again, once we reclaim that 50-week moving average, we continued on the next bull run. Another thing I'm watching is the weekly Ichimoku cloud here. This cloud can act as support when it is in the green, and when it is thicker, it's more stronger support. When it's thinner, it becomes more weaker support. We can see on this pullback here, we dipped into the cloud briefly, acted as support, and we did push higher. Looking at our current price action, we can see we dipped back into the cloud here, and we did actually close below it. Then we did get back into the cloud. We didn't open and close a weekly candle below the cloud. We can see it does seem to be relevant with our current price action. We came back up here to the top of the cloud, weren't able to get above it, came back down to the bottom of the cloud, and we have been using it as support for the time being. So perhaps we could stay in this cloud for a bit longer here, as we do get more of a dead cat bounce in the cloud. And if we were to open and close a weekly candle below this cloud, then that would indicate more bearish price action and possibly continuation of the bear market. Now I want to go down to the 5-day time frame, as I think there's some interesting order blocks on this time frame, and then the all-time high. And I would be looking for this to possibly act as resistance on the next touch point. And if we were to get that second touch, then that would confirm this pattern. At the moment, the top of the channel is at around 47,000, and I do also have that main trend line connecting the overall lows here, and also a pattern with our current price action trapped inside this possible triangle pattern. We do have two touches on both sides, so this is a valid pattern here. But we can see that we do see some confluence here between that overall trend line of support, the top of this channel in yellow, and also the top of this possible triangle pattern in orange. We do see that they interact around 44,700 to 45,300 So we could call that approximately 45,000 area, sometime between the 22nd and 27th of March. So this may be an area to watch if we do come up here as possible resistance area. But looking at some of these 5-day order blocks, as they do seem significant, we have this blue order block here from this red candle in an uptrend, and this blue order block from this red candle in an uptrend. And then we do have a small order block from this green candle in a downtrend. We do see with our current price action, this has been acting as support, this order block, on all of these candles here. And we do actually close this 5-day candle at the end of today's price action. So it would be good for Bitcoin to close above this order block, which is approximately at 40,000. And then we could look at getting back above this order block, which doesn't seem to have been as significant on these moves here. We have closed above it and then re-lost it a couple of times. But that key order block to get above on the 5-day time scale would be this one between 47,800 and 44,700. And down to the daily time frame now, the fib levels here, taking it from the high at 52k down to our low at 33k. We do see that golden pocket area, which has been acting as resistance on all these attempts higher. We do need to see a Bitcoin break this golden pocket area, which is typical area of a turnaround, and also get above this triangle pattern drawn in orange. We do see on the more recent price action here that we did actually have some bullish divergence. We see lower lows on the price action, looking at the bodies of the candles, while making higher lows on the RSI. We did have that bullish divergence, and we did get a bounce from that. It is more significant when we do have these bullish divergences over a bigger time span. For example, if we were to come back down here and close below this low at 35,000 while making a higher low on the RSI, that would be a much more significant bullish divergence. That would have more of a longer term bullish bounce. We do also have a similar triangle drawn on the RSI. This doesn't line up perfectly with the price action, so I am paying attention to it, but I'm not fully relying on it. As we can see, the triangle pattern on the RSI does end around the 3rd of April, whereas this triangle pattern would end much later, obviously. And even if we use the bodies of the candles here, this still has a different endpoint. So I am watching it, but I'm not placing as much emphasis on it. But if we are able to break the triangle on the RSI, perhaps it could give us a bit more bullish bias, that perhaps we're going to try and break this triangle on the price action. So we could possibly draw it like this, connecting the bodies of the candles, which the RSI does use. But if we also connect the bodies of the candles on the price action, this would be more of an ascending triangle, but we can see it would still have a different end date compared to the RSI. This can be drawn both ways. Some people like to use the wick, some people like to use the bodies of the candles. Now let's look at some moving averages on the daily time scale, and we have the 50-day moving average in yellow, the 200-day moving average in red. We have been playing around this 50-day moving average after getting this death cross back in the middle of January. And if we are to turn bullish, we would need to see us get back above the 200-day moving average and eventually get that golden cross on the other side with the yellow crossing the red line. But comparing these moving averages to previous bear markets, what we can see is obviously during the bull market in 2017, we never dropped below the 200-day moving average. And during the bear market, once we got that death cross with the yellow crossing the red, we can see on all these bounces, we came up to the 200-day moving average, but never reclaimed it and continued in the bear market. So if we were to do a similar thing with our current price action, if we are in a bear market since the 69k top, perhaps we could expect some dead cat bounces to come to this 200-day moving average, which is currently at 48,600. And we would expect resistance at that 200-day moving average on all of these dead cat bounces. If we are able to get back above it and hold it for a decent amount of time, then we could see the 50-day come back up and possibly form that golden cross, and that would flip me bullish on the macro time scale. And looking at some daily order blocks now, there are quite a lot of them, so it is a little bit messy, but we can zoom in here and we can see obviously this order block has been our main resistance area that we haven't been able to get back above, and this order block down here acted as support on the attempt to push down here. And as I said, there are quite a few order blocks here, so it does get a little bit messy. And I think it's probably better looking at the weekly time frame order blocks and the 2-week and the monthly. So I think that's about all. Hope you enjoyed that analysis. In the immediate short term, I'll be watching this 5-day candle to see if we do close above this order block, which would be above 40,000. If we do that, it will show that it did act as support, and perhaps we're going to push a little bit higher here. We'll also be watching this triangle pattern drawn in orange to act as possible resistance or support if we do come to either side. So thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.